In a world where payments are increasingly complex, one wonders how the next generation of financial infrastructure will adapt to shifting rails, global expansion, and embedded finance. We want to explore the confluence of issuing innovation, real-time digital credit, and global payments at scale. ATP, the Asia Tech Podcast, wants to know what are the structural opportunities and underestimated gaps in Asia's payment and credit landscape? How do next-gen issuing platforms, this is really interesting for me, by the way, tokenization and real-time credit reshape digital banks' offerings? And what does scale really mean for a global payments firm? We are joined today by Jeff Parker, the CEO of Paymentology, to help us unpack all of this and more. Thank you so much for joining us and for joining us at SFF 2025. What do you think? What do you think about this event?
So firstly, thank you very much for having me.
My pleasure.
This is my first time at SFF, so I didn't know what to expect. I'd heard a lot about it.
Right.
And it's lived up to the expectations.
It sure has.
It's pretty big.
Have you walked the floor and stuff?
I've tried to, but I'm getting tired. Just
thinking about it? Let's just jump right into this. Asia seems simultaneously to be the world's most fragmented and yet the world's most innovative payments region. How does this shape your Paymentology's strategy in APAC?
Look, I think you're probably right. We're a global business. We have clients in 65 countries, so we get pretty good experience of what's happening around the world.
Yeah.
I think what excites me here is the size of the market is huge. Yeah, I mean, if the population is ginormous, but as you said, it's many different markets, and so for us as a business, it's how do we take advantage of that size and scale, but also meet the needs of these different markets, which is challenging. Yeah.
Yeah. So one of the things that I wonder about is, like, for a company that operates in 60-something, you said 65, yeah?
65, yeah.
There's 65 markets. You learn sort of to standardize stuff across the board. But then particularly out here where the market is so fragmented, how do you handle this kind of thing of globalization, right? Like, you want to be really global, but you also want to be local because it's really different in every market, yeah?
I think that's the key to our business and something that I'm pretty proud of in terms of what we've achieved. And if we don't do it, then we just become another legacy player. And so the first thing is we have a single platform, single code base, single set of APIs, which allows us to keep it as standardized as possible. But we really focus on giving it like deep configuration. So you can take that standardization product, but then the customers can basically configure that as they want to meet both the local nuances, but also the product requirements of their particular customer. What we try and do as well over the top of that is a level of localization. So in the Philippines, for example, we integrate into BankNet, which is the local domestic switch.
Yep.
We do the same in Hong Kong with Jetco. And then we also put people on the ground in the countries as well, because I think while localization is partly about technology, actually a lot of it is about just understanding the local payments network and being able to speak the language, speak the same terminology in the same time zone. So it's a combination.
So we were talking about this before we started to record, but you've lived in Asia for a long time. What do the cultural nuances mean when you're actually trying to build these businesses out from scratch here?
Look, I think they're critical, and I think they're probably many more than even I've experienced. So I lived in Asia for 16 years, but I didn't go to the 28 countries that I went to a few of them. But you know, I worked in China very closely, and the way that they think and work and operate, given the scale of China, is very much around do one thing really, really well that can scale vertically really, really, very quickly. Whereas in other markets, which are much more diverse, it's about scaling horizontally. So it's really about understanding that market and then seeing how you fit into it.
So when you look at this region, right, what are some of the biggest structural opportunities in payments that maybe some other global players don't understand, or maybe they just underestimate?
Look, I think credit is a massive opportunity.
Okay, this is interesting.
I think being able to, with technology, to get much better at almost real-time decisioning, personalized to individuals, to be able to give meaningful credit to individuals and corporates, because I think there's probably a number of markets in Asia Pacific that are underserved, and so those people have just never had access to credit. So I think if we get that right, it's huge.
So you segued perfectly for me.
That's good.
Unbelievably perfectly for me. I love when my guests do that. Paymentology recently launched Pay Credit. So what fundamental gaps in credit issuance architecture does this solve?
It's a great credit. So when we look at what we do, most of the innovation that we see in card issuing has really been focused around debit and prepaid.
Right.
And credit just hasn't been done. And when we looked at credit, we actually found that the ledger that supports credit is typically a debit ledger that's been tailored for credit, and clearly that means it hasn't been designed. So when you look at interest calculations, billing cycles, statement production, all of those actually have many issues around credit. So we built a stack from the ground up that meets all of our needs around cloud first and flexible, etc. But with a focus on credit. And we believe that when we add that with the fact that we can do both revolving credit and installment credit together, it provides a real opportunity for businesses to, I guess, expose a part of the market they haven't had access to.
Can we dig a little bit deeper into this, if you don't mind?
Sure.
Because when I was doing a little bit of research, I don't think a lot about issuing or card innovation. It's just not something I'd thought about. Can you talk to me a little bit about where that fits in? Like, why use the card for the credit?
So first of all, I would say that the issuing market in itself hasn't been very innovative. I think if you look at the acquiring space and what's happened there with your Stripes, your Adyen's, etc., they've created these billion-dollar behemoths.
Right.
And issuing has really stayed still. I think we're 10 years behind the acquiring market.
I've never even spoken to anybody seriously about issuance innovation. So that's why I was so interested to talk to you.
Which I think is why it's so exciting.
Yeah.
And then when you think about card, I think people are very simplistic in their views around how do you use card. Yeah, it's a piece of plastic in your pocket that you use for buying a piece of coffee. Yeah. If you think now about that innovation has gone to virtual tokenization, Apple Pay, Google Pay. You think about credit. Right. You can do your credit assessment, and then you can put the credit limit on the card instantly. You can do insurance payouts. You can start to do things like motor insurance. You can provide small real-time loans to fund medical aesthetics. There's huge use cases that I think are now being opened and explored through that environment.
So when you do that kind of card issuance innovation, does that mean you're partnering with insurance or partnering with other credit providers to do that?
Correct.
So how does that work?
So our typical client is a digital bank or a fintech.
Yep.
We're a tech player, so we're not licensed. So they typically bring the license, or they partner with someone with a license. But increasingly, when you talk about embedded finance, which everyone wants to talk about, then you start to get these non-banks, and so it's your insurance players or retailers or medical companies, etc. that we're starting to partner with, and we kind of bring the different parties together in the ecosystem. To allow those people to provide the financial products.
And I guess this partnership gets back to the cultural conversation we were having before. Building a partnership in Europe or building a partnership in the UK, it's got to be different than building a partnership in Hong Kong and China or in other countries out here. Again, particularly because of the fragmentation. Is that fair?
Totally true. So one of our biggest, fastest growing markets is actually Saudi Arabia. Now, how they do business is very different. Me as a white Westerner trying to do business in Saudi Arabia is not very successful. It's much better to have a local Saudi who knows the market. It's all about the relationships. No business gets done between 9 to 5. It all gets done between 9 p.m. and 11 p.m. In the evening when they all meet
But fair enough, right? I mean, not so different than Japan, right? Not a lot of business gets done in Japan 9 to 5. It's mostly 6 to 8:30, I would say, if I had to pick a time.
It's very true, and so you have to understand that, yeah?
Yeah, so fair enough. I'd love to go to Saudi Arabia. Do you go?
I go quite a lot. I've been 5-6 times this year, yeah.
Have you really?
Yeah.
How would you characterize the way they do business, besides the sort of timing and stuff like that?
Everything is urgent. Like they have this.
That's interesting, though.
They have this 2030 vision. They want to, I think, create 250 fintechs between now and then.
Oh, wow.
It's the fastest pace of digitization in the world ever, I think, as far as I'm aware. So 10 years ago, it was a very cash-based society.
Yep.
It's digitizing at an incredible pace. And it's just urgent. And they've got money to burn. So
PIF is one of the biggest sovereign wealth funds in the world, right?
Yeah, exactly.
So interesting. I really want to go.
Yeah, you should go. It's amazing.
I've been to the UAE a bunch of times, but I've never been to Saudi Arabia. So GCC, very interesting, but Saudi is kind of its own animal in a way.
Yeah. And it's not quite as extreme as this, but it's literally you go once and 6 weeks later, there's a 50-story skyscraper. They move at pace.
That's the urgency, I guess, right? Guess. So where do you see, you said before everybody wants to talk about embedded finance. It's 2025 and we're at a fintech conference. Is anybody talking about artificial intelligence?
No.
I don't think so. But where do you think it fits in improving the issuance stack? Because there are a bunch of different places, right?
Yeah, huge.
So feel free.
So let's take outside of the issuing stack generally. We're using it quite a lot across our business just for operational efficiency.
Internally.
So everyone in the organization has enterprise ChatGPT. We're using it to streamline. We've got our own agents internally to be able to query information, and it pulls from all the data that we have across the organization to just pull up answers immediately. We're providing agents to clients on our API dev portals. We have a team of what we call automation engineers, which is literally just going through the organization and looking at how they can automate traditional functions in the business. But then outside of that, we've actually just launched a new way. I'm very passionate about forcing change. So I've created a product that we were going to develop, or that we're developing. We were going to put 20 developers on it as a team. I've told the team they can have 2, and they have to use 90% of code written by AI. So we're just going to test it. We're going to force AI to write the code and see whether it works. And so we're going to just test it and see whether it works. Yeah, we started 2 weeks ago.
Oh my God! So I can't even ask how it's going.
No, I don't even know how it's going. No, I just don't know.
But why so few people? Like, why do you think it's so important to force this?
Because I just don't know. I think.
You think it's better that they can learn better if they're under pressure?
I think so. I think scarcity creates innovation. And
I don't disagree with you.
Human nature is not to go full in because who knows what's going to happen. So I think if you create that environment, I think it's useful. But back to your point about the issuing stack, fraud is a huge opportunity for us. How do you take reactive rules and decisions to be proactive? And so how do you take the data, start to simulate how the behavior of you? So if you do transaction A, B, C, I think you're going to do transaction 5, 6, 7 in the future, and that may be fraudulent. So if I can start to use data to forecast that. Insights, I think data insights is super important to help our clients grow.
Yeah.
So massive use cases, I think, but everyone's still learning.
Do you get the sense that some of your clients are using AI way more than others of them? And do you feel like the ones that are doing what you're doing, forcing it, are moving ahead faster in helping their own businesses in a way that these people aren't?
I think so. I think if you're a genuine startup, I think it's easier probably to adopt things. So I think those people are doing it quicker. More established players, I think it genuinely is a mindset. And I think if you don't force it, you can't prove it. And I think you just have to take some, we call them informed bets.
Yeah.
You have to take a few of those and see if they pay off.
I don't like betting on things that I don't have any control over it, but this is an informed bet, right?
Yeah, exactly.
Because you have control over it. You can actually affect it. Where do you think agentic fits in, if anywhere?
I think it does fit in. I think for us, obviously having agents to support customer service and things like that, I think are useful. I think the biggest space is probably outside of it. It's when you start and get into the commerce space here and things like.
Okay, go for it.
Please book me a holiday for my family next year to Asia, and it goes off and does its thing. And
I like the way you're thinking, by the way. I like the way you're thinking.
So I think it's still early days. Some of the stuff that MasterCard and Visa are doing seem pretty powerful in terms of agentic and the commerce space. I yet haven't actually come up with how I think it's going to impact the issuing space massively.
Yeah, it's a good answer though, right? We spent a lot of time this week talking to people about agentic, and I have to tell you, my feeling on this, not that anybody asked me, is that I think it's far away.
Yeah,
I really do, for real use cases, for real humans, and I think part of the reason is trust.
Yeah.
And trust in outcomes, right?
Yeah.
And this is what you were talking about before. I want to have agency in the things that I'm controlling.
Yeah, agreed.
And if I can't control it, I don't know how it's happening.
And I think there's an element of satisfaction out of doing some of that stuff as well. Yeah, like if everything was just done for me easily, where's the satisfaction out of this?
Well,
stuff?
I agree. So don't you think even in your own business that the human relationships are super important? Like even when it comes to embedded finance, like the people that you partner with, those relationships have to be really strong as well.
So I like to say that you need to deliver a world-class service leveraging world-class technology, because the service can be world-class through the technology.
Sure.
But a lot of people still want human interaction, and our business is a B2B enterprise business. So
yeah.
We are only successful if our clients are successful.
Absolutely.
So and you build trust. Unfortunately, you build trust when things go wrong, and it's how you respond when those things go wrong.
In a way, right?
And in my business, unfortunately, you can never be 100% perfect. So I'm always going to have a customer who's unhappy with me at some point, and I think it's how I react to that. And typically it's how I react with humans that will build the long-term trust.
How do you think top-down management impacts company culture in the way that they provide that customer service that you were just talking about?
I mean, it's the only way that impacts culture, I think. I think like they look at the people at the top and say, are you living the behaviors or the values, or people follow what you do. Yeah, if you don't live those behaviors, how do you expect anyone else to?
Yeah, I don't disagree with you at all. Yeah. I think we talk about this all the time inside of our own company. I think it's really important. When you talk about companies that are coming into Asia or APAC, what are some of the biggest misconceptions they have about localization?
Probably two things. I think people don't understand Asia enough, and so they probably don't understand the differences between it. And literally, that's Europe has different cultures, but not to the same degree. So you go from
like Germany's different than Italy.
It is, but Spain and Italy maybe not that different.
Right.
Yeah. Whereas I think in Asia, I think there's much more differentiation across it. So I don't think people have really understand the cultural differences. There's obviously language differences which are not originated from a similar Latin base, let's call it. So I think that's very different. And then I think you mentioned it before. I think people assume localization is technology. I don't think they realize it's the people side of things as well. And that is incredibly important to get that right.
Yeah, I mean, I told you, I lived and worked in Japan for 20-something years, and I saw guys and gals come over from the United States like literally every week and just get everything wrong because they thought they could just import New York culture into Tokyo. Even if the guys and gals could speak English, it was like a head fake to them.
Yeah, it's completely different, yeah.
Just completely different. What are the fundamental universal elements, though, that are so important to have a great payment infrastructure?
Look, I think now there's some hygiene factors, and I think you do really need to be cloud native. You need to be API driven. You need to work on configuration as opposed to customization. So I think they're okay. I guess basic if you want to be global. And I think one of the things that we tell our customers a lot is even if you are only operating in one market today, think about the future, because if you're ever going to go multiple markets, you need to make that decision today, not tomorrow, because if you pick the wrong partners from the start, it's very hard to unwind it.
And where do you input, what's the right word? Where do you insert, cross-border payments into this? And what level of complexity does that add to the stuff you're building? And why is it so important as well, particularly from a commerce standpoint?
Yeah, I mean, I think the world in the last 15 years, excluding the last 2, let's say, was on
off to the side.
was on a big globalization trend. Yes, so everything was going global, and so global commerce is, I'm stating the obvious here, but you can't do global commerce without global payments, and so you need the payments piece to do it.
You said that right, and I don't want to interrupt you, but for 20 or 30 years, we did do global commerce with a very, very clunky global payment system.
Correct.
Right.
Yeah. But there has to be a payment.
There has to.
It was just a bad payment.
Yeah.
Now, even with, I think, the last 2 years, and we've seen increased sovereignty and people kind of retrenching a little bit back to their own
short-term
markets.
stuff, I think.
I think it's short-term.
Just my opinion.
I agree.
I've been alive way too long to think that, and again, this is not a political thing at all. Humans want to go up and to the right.
I totally agree.
They just do. And if you look at the long arc of history, there are always ups and downs, but it's always going in the same direction. And you're right. These last 2 years feel like really important.
And we need to remove friction. And I think the real friction point in this today still is cross-border payments.
Yeah, I completely agree with you. Look, I'll give you a perfect example. I spent a lot of time talking about universal payment interface in India, right? Pay Now in Singapore, I think it's called.
Prompt Pay.
And I use Prompt Pay in Thailand. And I don't pay for anything with cash, almost nothing, right? I just prompt pay everything. And I hear rumors that prompt pay is connected to UPI and
I just saw that,
and also connected to Pay Now. So I was in a place last night or the night before, I can't remember, and I'm like, can I just scan to pay? And they were like, sure, but it didn't work. But I only bring this up not to be funny, but because there still is friction. In a way, I care about what the FX rate is, but I more care about, I want that donut.
Yeah, and I want it now.
And I want it now. And I have the money for it, but I don't have your payment thing. That's bad for everybody.
And that's why Visa and MasterCard are so successful, because they just have this not universal acceptance, but they have pretty good acceptance. I mean, in Asia, you're starting to see Alipay Plus with Ant, where they're connecting all the wallets, the Gcash, the Bcash, the Danas, etc. So you can do that single thing, but it's still not universal, yeah?
No, and it should be. Yeah. It should be just as easy for me to pay here than it is for me to pay in the United States or pay anywhere else in the world. How do you balance the expectations of rapid innovation with the inherent necessity of reliability and stability? Do you know what I mean? Because you want to move fast, but you want to ensure that the stuff you're building is stable and reliable. And you're clearly a guy who pushes people to do stuff, right? And that's not a bad thing. We do the same thing ourselves.
I was told that I have my team told me last week that they feel like never enough. It's never good enough.
I was just told by somebody I give off evil vibes. I'm like, where does that come from?
How do you balance it? Look, I think everyone in this conference, or most people in this conference, are in some form of financial services and moving money.
Right.
So trust and reliability has to be the number one. Yeah, it has to work every time.
Yeah, and your clients are big institutions.
And clients expect it.
Yeah.
I think so. I wouldn't say it's balancing it, but it starts with that foundational trust. How do we then make sure we have innovation which meets and hopefully exceeds kind of expectations? Without being repetitive, I think it comes back to some of the things that we talked about earlier. It's designing your infrastructure in a way that allows you to scale, both from a technology perspective, but from an operational perspective, and then not become legacy yourself. And that's around configuration versus customization.
So this is perfect. The dude's segueing perfectly. So what parts of the payment stack, just to get more into the weeds, have been most overdue for reinvention? Like tokenization is a big thing, which you already mentioned, virtual cards, interoperability, all this stuff. But which part of that stack has been most overdue for reinvention, you think? Like where you're sitting here thinking today, like, I'm looking at what we've built already, and, you know, like you said, it's never enough, right? What's the next thing you're focusing on that you think is super important, needs to be reinvented?
So I think, and I'm not sure it needs to be reinvented because I think it's still early days, but tokenization is where I think everything is going. We're talking about payments here.
Yeah.
I think if we're sat here in 2 or 3 years' time, we're probably talking about tokens. Like, I think a payment is going to become the token.
How's that gonna work?
Well, I think, you know, everything is around the digital experience.
Yep.
I think everything is around how do you make it frictionless, seamless, and secure, and
Yep.
a token does many of those things.
Yep.
When you look at what MasterCard is doing in getting rid of the 16-digit card number, it's going to become a token.
Yeah.
When you think about what does that mean for the infrastructure, a core banking platform is orientated around a card number. So
or a bank account
the
number.
CRM.
Or an account number.
Yeah, or an account number, the account identifier.
It's all built on
the
numbers.
Statement, it's all
Yep.
around build about.
Yeah.
If all of that disappears and it's just a token.
So how does that work from a CRM perspective?
Well, it's a good question. So one of the theses that we have at Paymentology, because we're very good at tokenization, is that that's going to be the trigger point for a lot of the legacy providers to have to reinvent their stack. And do you refactor something to still have a legacy stack, or do you actually take the plunge and go, let's go digital native? And I think that's what may happen in the next 5 years.
But they're going to have to go digitally native, right? Because commerce is going completely digital.
I think so.
And if the money itself doesn't go digital,
Yeah.
you can have a whole conversation about programmable money as well, right? And if the money isn't programmable, then how do you deal with the fact that all of your commerce is also programmable?
Exactly. You've got to think it's going programmable.
Because those things don't match up. Where else does tokenization fit into this? Like, how about from a credit standpoint? What does tokenized credit look like?
So I think credit needs to or can become instant and personalized. So
Go ahead.
So I think, and this is probably a use case for AI actually. So if I understand my customer enough, if I can take multiple data sources to help me understand, you know, what's the behavior of Jeff, I should in real time be able to give a credit limit, and I should be able to do a credit scoring against the transaction, not the human. So as I go to buy a fridge,
Go ahead.
rather than saying, can Jeff afford that fridge, it should be, I'm actually going to make a credit decision against the fridge.
So how's that different?
I think
because the fridge isn't paying for it.
It isn't, but I think it gives you, whether if I'm buying a fridge or if I'm buying a luxury car or if I'm buying something which is not essential, I think it has a different, potentially has a different credit scoring against it. So it might be the same amount, but
right.
if it's used for a different purpose.
So can I ask you this? If we're entering this sort of real-time credit scoring thing or just real-time economy or real-time financial system, does that mean that every time I go to buy something, that my credit can change in real time? Do you know what I mean? Like that credit assessment is going to change in real time.
I think that's where it could go if it gets that. I think that has to be the utopia.
And I'm just trying to think like what the implications of that are. Right, because like let's say I do buy that fridge. Let's say I'm paying it off bit by bit the same way that I expected to pay it, whether with a credit card or some kind of tokenized payment. My credit should get better in real time.
It should, but the people this is going to impact probably aren't me and you. It's the person who can't get credit today.
Yeah. But even so, though, that person again who's never owned a refrigerator goes and buys one, and maybe there's a little bit of skepticism, human to human, about whether that's possible. But from a technology standpoint, like you said, they're doing the assessment on the fridge, not on the guy who's buying it or the gal who's buying it. But once that becomes okay, the next time that person goes to buy another thing, that assessment is made in real time, faster, better, easier.
Agreed, and hopefully
more credit gets offered.
Yeah, if he pays back, or if they pay back, and so that hopefully gives these underserved individuals or segments of the market the ability to actually contribute. I mean, it's so factored against the people that aren't served properly.
Yeah, I mean, look, if you've ever been poor,
if
you've ever been poor, you know what it's like not to have access to credit.
You get high interest rates. I mean, it's just
so you get everything's no pun intended, but stacked against you. How important is financial inclusion to you?
Huge.
I
think we have a saying in our business. We like to change lives. One of our purposes, missions is to change lives, and we talk about changing lives for our own employees. We talk about changing lives for our customers, the cardholders, and the communities that we work in. So we are one of the businesses that is part of our business today was founded in South Africa. So many of our initial founding years were in emerging markets. And so we actually gave jobs to people that never had jobs before. We actually started to, some of the things we've talked about, we gave digital opportunities to communities that didn't have access to that before. So they were cash-based. We supported like credit to being given to these local communities, the shanty towns in South Africa, for example. And so I think finance has a huge potential to play in helping. It's a rising tide. Yeah, your whole thing earlier.
Yeah.
Everyone wants to go from
Up
bottom
and to
left
the
to top
right,
right. Yeah.
Yep.
I think finance, if it's ethically used and responsible,
For sure.
and credit falls into that bucket.
Well, that's the multiplier factor.
Can have the multiplier factor.
Is there a part of you, like every business wants to make money? Let's put that off to the side. But having a mission for that business, even if it's not completely financial inclusion, but that's part of it, it's got to make you feel good when you see yourself, first of all, change your employees' lives. You're like, that was never going to be possible before. And now it is, and there's joy in that. But then your clients' business, your clients' lives as well, yeah?
It's incredible. And actually, it goes both ways, because when you get it wrong, you also get told how much you've impacted negatively our clients' lives as well.
And you never want to do that again.
Exactly. And one of the biggest things that we have in our organization is to make everyone in the organization understand what it means for the product to work. Because, as you said, it's not just me not being able to buy a cup of coffee. It's often someone who's buying medicine or food.
For their parents.
They don't have it for their,
or for their child.
It's real life. It changes lives. So it makes me incredibly proud that I think, in a small way we can contribute, and we care about contributing to the people we deal with.
Do you think it's important to tell stories about financial inclusion? To get this message across about, it's not just about, it's not charity. It's actually changing people's lives in a way that's really effective and important.
I think it is. And one of the challenges I think you get sometimes is you need to tell the story in a way which almost makes you invisible, because we're not doing it for our company. It's about, and that's sometimes the challenging way about how do you get those stories across in an unserving, selfless way.
Fair enough.
But no, I agree. I think telling the stories is incredibly powerful, and people don't always understand. When we start the conversation, people don't always understand how financial services can change lives like that.
Yeah. I mean, we've lived privileged lives. Like, even the poverty that I went through was nothing like somebody else's poverty.
Yeah.
Right? So it's hard to explain. Anyway, one last thing. What is the craziest idea in payments that you believe is still worth pursuing, but most people think is not possible today?
I think you touched on it earlier. Maybe it's something along the lines of programmable money that thinks like you and acts like you. And so it almost, the money in advance knows what you want to use it for and how to use it. And so when it's deciding for you in real time whether it's credit, whether it's debit, whether it's real-time payments, whether it's almost like low-cost routing, etc., like on super steroids and stuff. So it's telling me what's the best way to use my money and how to spend it.
It's optimizing for you.
Optimizing for you, yeah.
Jeff Parker, the CEO of Paymentology, thank you so much for doing this today. I really appreciate your time. I hope you enjoyed this as much as we did.
Thank you very much for having me. That was great.